It's okay. Thanks. Ah. Oh, okay. We'll just wait 3 or 4 minutes and we'll start. Thanks. Accounting. Okay, go. Right. Can I go? Okay. Good morning, everybody. Okay. First of all, I apologize for my voice because I lost it yesterday over there. And Fabien told you previously that we make a little party, so I try to be understandable. My name is Alessandro Mazzocchetti. I'm the Chief Financial Officer of Odoo. Family name a bit complicated, so Alessandro is for everybody inside, outside the company. I'm in charge of finance, accounting, HR administration. By the way, later on I will give you a presentation about our HR tools we use within the company to recruit 100 more people per year. Accounting for entrepreneurs, understanding how your business is performing. Right. When I wanted to put together some slides for the other experience, I want to do something really smart and useful for you guys, entrepreneurs. Maybe, yeah. Thank you. Okay. I want to give you, wanted to put some slides really useful for you, entrepreneurs, for the business life, on the daily business life. I want to talk about finance, but especially I want to talk about accounting from outside. Frankly speaking, I was thinking to myself that to talk about pure accounting is a bit risky because accounting is a boring subject. And when you talk about accounting, you risk to be really boring. And I don't want to do that. But when you talk about accountant, you know, an accountant is someone who solved a problem you didn't know you had in a way you don't understand. So I wanted to turn this in a positive way and give you the tools, 5, 6, 7 different tools to use on a daily basis and can be really useful on your life. Today, I don't want you to transform in an accountant. It's not possible. I'm neither an accountant, in finance. But I want to give you the tools to understand your company through accounting. So I want to give you the possibility to turn accounting into priceless tools and, yes, and daily tools to monitor the performance of your company. According to a Small Business Administration, it's quite really outstanding this. 28% of business go to bankrupt due to problems with the finance structure of the company. They simply don't understand the difference between profit and cash. They don't understand the difference between assets and liabilities. They don't understand the difference that if we have profit, we cannot put the cash into the pocket. It is a shame. And why they don't understand this? Because no one explained to them. And that's why the crucial role of the accounting and the accountant behind. I think that most of this problem can be avoided by following a good accounting practice And understanding your accounting paperwork, it's really absolutely a priority to stay top of the business of today. The business is stronger and stronger today, so you need an edge, and accounting can be an edge. So let's see in detail accounting cheat sheet. The good accounting is crucial to the growth and the longevity of your business. So you have the create and manage budget. Not so many entrepreneurs to do a budget, but it's so crucial for your business to do a budget. And to do a budget, you need data from accounting. Budget is a forecast, is try to oversee in the future. A venture capitalist told me once that if the forecasts are right 30–35%, he's a happy man. It's true, the forecast is still an exercise that could be quite painful and not really 100% accurate, but it's still an exercise. It obliges you to ask yourself the right question at the right time. Pricing, sales, cost of sales, cost of goods, SG&A. So forecast future revenues. This is indeed another important step through accounting. Determine the best time to do a purchase. In the life of an entrepreneur, the purchase and investment is a really important step, so understand when we can do that. This is based on the cash flow. It's really crucial as well. Keep track of the expenses. The expenses, the sales, the salary, sorry, the selling general administrative expenses, all those expenses have to be tracked on a daily basis, on a weekly basis, on a monthly basis. You want to really succeed, have the business under control. Track the financial health of the business for your stakeholders. We talk about the stakeholders later on, internally and externally speaking. Determine when to adjust to operational personnel, okay? Keep a practice for future investors and see how fast or slow you are growing. This is a really very important point. Because most people think that, it's fine, we are growing, but when I say is growing has to be financed. When you grow, you need cash. And you need to understand that you are growing, when you're growing, and how you can finance this growing. That's why these 8 principles are the base principle for a good management of the company, and with the accounting, we can manage those principles. So we go into details of this short presentation. So what is accounting and why business needs it? We already talked about this, but we go into more details. We're going to see basic accounting skill and example through Odoo. The purpose of this presentation is not to start to book a salary, reconciliation, or things like that, but just give you a snapshot about a couple of operations. We're going to use data from accounting. So we will see how accounting can give you an add value using always Odoo software. And I will finish with some principles for must-do, from my perspective, to retain, to be a good manager with on average financial knowledge of the company. So what is accounting and why business is it? We have 2 different definitions of accounting. The first one is the American Accounting Association, a typical association that has different, quite complicated. Accounting is the process of identifying, measuring, communicating economic information to permit a judgment and decision by user of the information. Right, excellent, perfect. But it's not really, from my point of view, it's not really the correct view of the accounting, even if you have identifying, measuring, and communicating information. For me, a good statement, a good definition is a definition from someone on the spot, who is Rat Porat is the Google CFO, something that is dealing every day with growing, with sales, with capital, internal, external capital. What is saying? He's saying that accounting can be defined as the production of financial information. Exactly, production of financial information. What this means is accounting allows us to see things like how much margin we are earning. This is practical. How much we are earning, how much we are worth for external, for internal, for the bank, for employees, for stakeholders. How much you spend, and when can I improve to make even more money? So we really have practical tools. I will add on the top of that where my money are going, so the cash approach. The reason we need to know this is so we can make decisions. Everything is about data. And I think that this definition is really the right definition of the accounting, not VAT filling or balance sheet, the profit and loss. It's really about information, providing information, and see what is behind the figures. We have three fields of accounting. We have the tax accounting, we have the management accounting, and we have the financial accounting. Just a second, I take some water, so you know I cannot continue. So tax accounting. Tax accounting is about, I say that tax government is a shareholders of the company. You have to pay something, the difference between another shareholders that are not that value anymore, not at all. But it's a debitor of the company. So you have to treat it like an external that is entitled to get money. So this is the part of tax accounting. Exactly. Well, and then we have the management accounting. This is an internal definition, so designed to help people inside the business make decisions. So we have all the side of financial reporting, or the side about budgeting, about forecasting, about tracking the results, tracking the actual versus the forecast versus the budget. Is normally customized and designed to meet needs of the user inside of the business, and every company has a different reporting package. The package normally is updated daily, monthly, quarterly, yearly. We have, just to give you about my experience, we have a monthly reporting, we have quarterly reporting, we have a quarterly review, all these kind of tools. And then we have the financial accounting. The financial accounting helps people outside the business make decisions. We help people outside the business or inside the business as well, but especially outside the business. Who are people outside the business? That's the stakeholders. So the people that has an interest to know your financial situation. Could be the bank, could be your suppliers, could be the employees to see the health of your company. All those people, they need information. And you produce and you use financial accounting to help these kind of people to give you visibility about the company. Now, when we talk about the financial reporting, we have to talk about general accepted accounting principle. This is simply the rule of the game. We have a GAAP in the UK, in the US, in Belgium. They are simply the rule that the country set to produce financial accounting. And this is quite important to understand the gap because, with three different countries at the same company, you can come up with different results according to different gap. For instance, if I'm making profit in UK and I report into Belgian gap, I can make a loss, and the other way around. So gap, it's really, really crucial. Now we have the US gap, we have the IFRS in Europe, but when we play from one to other, we can discover, we can come up with different results. So again, profit is an accounting opinion, but cash is a reality. It's really the statement that you have to really keep in mind. Profit is an accounting opinion. It depends where you're going to do the accounting. You're going to do the accounting in US, in UK, in Belgium, is really a profit. Cash is always the same. I report in US GAAP, in UK GAAP, in Belgian GAAP, in African GAAP, the cash is exactly the same. That's why I'm more interested into cash, we will see later, rather than the profit. The profit can be between brackets. We can do a window dressing, we can eliminate something, we can improve other things. Okay? We do an example. Imagine the CEO of Sweet Bakery in Brussels, so Tom, that is running your bakery, your bake is the best cream cake in the country. It's running so business so successfully that one moment I have to buy 10,000 machines. So he's go to the bank to ask a loan. the first thing the bank asks to him is, okay, do you have some accounting? Do you have some plan? Do you have some financial forecast? Do you have a reporting? And most of the people, they don't. And that's why they are struggling to raise money. They are struggling to be supported by venture capitalists, by bank, by suppliers. Not because their business is not successful, but they don't understand the methodology of the business. We talk about working capital. Working capital, what is working capital? It's the difference between what you have to receive or what you have to pay, but it's so simple as definition. Working capital is the money you need to run a business. So many people that I know, they run a business with €0 on the left, on the right, so on the capital, and they buy a machine, they do a loan, and they finish the month run out of cash. So they're saying, it's not good, the business is not good. No, it's business good, the business is good, but it has been not properly financed, because those people doesn't understand the logic behind the figures. So why we need accounting? We need accounting to make prediction about the future. We have to make prediction in terms of revenue. It's quite important. When we have a prediction in the revenue, we have a prediction about the cost, so the cost to realize the revenues. And an asset, more important thing, the CapEx, capital expenditure, do we need to assure the future revenues. And indeed, accounting can help you because they give you analytical tools to make prediction and to link what we expect to happen. To help you to make more effective commitments on time, energy, and money. The entrepreneurs normally make 4 different commitments. The first commitment is to building an asset to buy a machine, to do a building, for instance, more often to buy a machine. It's the first commitment. Promise to pay a fixed amount over time, what we call rent, or a fixed person time, we call salary, is the second commitment. Third commitment, more important, borrowing from the bank to expand, for growing. So you have to take into account the cost of capital. Capital is cheap today rather than equity, because just to remind you, the only way to see if a business is profitable or not is to see the capital we use and calculate what we call the cost of capital. So the rate we expect for the same asset in the future at the same risk. Complicated concept like this, but easy concept. What we call in finance and accounting the return on equity. So it's quite important to understand this, because sometimes it's better to take money from outside from the bank rather than put the money inside from a shareholder, because it's more expensive. The shareholder expects more than the bank, because with the bank we have a tax rate of 1, 2, 3, 4% maximum. And the fourth commitment is making working capital investment like inventory, customer credit, that will be sold or recorded. And finally, to measure and reassess your progress. So this is, we are talking about forecast again. I do the present, I do the forecast, and then with the accounting, I understand the difference between present forecast, and I do the fine-tuning, basically. So this is just to begin, just to give you really a general snapshot about what accounting can give you in terms of add value. Now we go into details a little bit. Again, it's not an accounting course, but just to give you some basic skill, and we will try to do some example to Odoo. We have time, yes, it's okay. First element, asset. Asset on the right side of the balance sheet. What is asset? Asset with the items with money value that are owned by a business, and the items that are supposed to generate future benefits and repayments. We have current and non-current asset, more liquid, less liquid. In US GAAP, the asset more liquid is on the top, and the Belgium gap is on the other way around, is at the bottom, but it's always asset. It's always the same. It's what you own of the company. So your richesse, your wealth, we'll say, in the company. Second element, liabilities, is the other way around. Liabilities are debts on the right side of the balance sheet. Liabilities are debt owed by the business, and items that represent economic future sacrifice. Loans, account payable, salary, taxes, etc., etc. Again, liabilities, current, non-current, more liquid, less liquid, depends which rules we use, US GAAP, Belgium GAAP, on the top, on the bottom. But we are all talking about liabilities, is the same in Belgium, in US, and UK. Most important things, owner's equity is the money that we put in the company to start the business. Okay? It's the capital, proprietorship or net worth. The amount of money that you have to invest in the business. Okay? And then we have the first equation that must always balance, is asset equal liabilities plus owner's equity, or asset minus liabilities equal to equity. Just to give an example, I buy a building for 10, and then I finance this building with the equity of the bank, so we have 10 as asset, 10 as liabilities, 10 on the left, on the right, because the equation must always balance. And then, after 2 years, assuming that I pay 1,000 per year, after 3 years, what I have always 10 on the left, because it's my building. On the right, I have 7 because I already paid 3. And the difference is what? Could be an equity, could be the difference between asset and liabilities. Then, when we understand that what is asset, what is liabilities, and then let's talk about transaction. Okay? The transaction involves taking a decision on whether a particular business event has an economic effect to the asset or liabilities or equity in the business. And then you have to understand, have to quantify the magnitude of this transaction. Typical transaction, asset and expenses, an increase is recorded as debit, a decrease is recorded as a credit. In liabilities, equities and revenues, it's the other way around. But why is the other way around? People often think that debit is asset, but liability is credit. Okay, it's the other way around. But let's talk about the logic. Why is the other way around? It's quite simple. Because my asset is your liabilities. That's it. What is an asset for me is the liabilities for you. I have a machine. Okay, for me it's an asset. Could be an liability for you. I have a account receivable, so I have someone that has to pay me. It's an asset for me, but he has to pay me. So for him, I'm liabilities. That's why. Debit, credit, asset, credit, debit, liabilities. It's quite easy when we understand the logic. So let's do an example. The owner brings cash from his personal account into the business. The analysis, cash, an asset, is increased. So we debit cash. And the owner capital and equities increase, those credit owner capital, because debit is equal to credit, entry value, exit. So we have two different movements about this operation. Let's do another little example, like office supplies are purchased on account. Office supplies is an asset is increased, those debit office supplies, and then accounts payable, because it's a liability for me, is increased, those credit accounts payable. But let's see, accounts payable is a liability for me, but for the guy that sold me the office is an asset, because he's booked me, he's registered me in the accounting as Odoo, or what company, I don't know, has to pay the bill. So debit and credit. Now we talk about the impact in the P&L. So wage payable are paid. So we pay the salary for 1, 2, 3, 10, 100 people, whatever. Wage payable is a liability for me, so I have to pay salary. It's decrease, debit to wage payable. And cash, because I have to pay in cash, so decrease, credit cash, debit and credit. We finish with revenue, is earned but not received. This is another principle quite important to stress, because it's not because I raise an invoice I have the money at the bank. Sometimes people make this mistake because I have an invoice in my folder. I have the right to take the money and put in my pocket because I have the turnover. No, it's not really like this. Because we have the account receivable, that's why. I have the day sales outstanding, we say. So the number of days we need to recover an invoice. So in this case, revenue is earned but not yet received, so account receivable is an asset, is increased. For me, is an asset. For people that have to pay me, is a liabilities. So will be a debit, a credit for him. In my case, is a debit. And then we have revenue. Revenue is the P&L, profit and loss. In this case, it's credit. Financial statement. We have the income statement. Contains only revenue and expenses and show the net gain or loss. It's the difference between revenue and expenses. And the balance sheet is the list of firm assets to liabilities and owner's equity. The main difference between income statement and balance sheet is a picture at the moment of the company. My balance sheet today in Odoo is not the same as balance sheet tomorrow. An income statement is monitoring the difference on equity in my balance sheet, and is always be zero at the end of the period. We have the cash flow statements as well, but I didn't put the cash flow here because, unfortunately, most of the accounting principle doesn't require mandatory do cash flow statement. In US, it's mandatory because they are business guys. For instance, in Belgium GAAP, you are not mandatory to provide a cash flow statement for the investors. You have to do in IFRS these different rules. But cash flow is a more important thing than income statement and balance sheet. It can give you a snapshot of where the money is going. And if you are running out of money, especially. So, I hope to zoom a little bit this. No, I cannot zoom, so I cannot read it very well, but I try. So, the profit and loss statement, revenue. You not see. I would say. Okay. We have profit and loss statement. We have revenue, cost of goods sold. We have gross profit, the difference between revenue and cost of food. You have the expenses, and then at the end, we have the net profit. Revenue minus cost of goods is gross profit. Gross profit minus expenses is net profit. The net profit normally is, in finance, in accounting, we talk about earning before interest, taxes, depreciation, amortization. This becomes the EBITDA, which is complicated if our finance guy give this concept like this, but if you understand the logic, because we report always the EBITDA, but because after the EBITDA we have something that is not cash impact. Depreciation, amortization, taxes, interest, not always cash impact. That's why we want to give you a snapshot of the business, of the operating business. That's why we report EBITDA. Oh, sorry. Okay. We have, balance sheet, asset, liabilities, equity. And then we have in the asset, cash, stock, account receivable, inventory, equipment, vehicle, liabilities, credit card balance, blah, 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 equity, retained earnings, common stock. And then we have what we call the business ratio. Business ratios are used by financial analysts, investors, bankers to give a rank to your financial health. And they do a sort of benchmarking based on your activities to see if you're performing well compared to this rank, I would say. we have some ratio like current ratio, quick ratio, pre-tax return net worth, pre-tax on assets. It's quite technical, but I just want to give you a snapshot about the ratio, what is ratio, the why we use ratio. We don't go through into details, so a little bit boring and too technically. So, understanding where your money is going is really the most important part of accounting, business, and activities. Because I stress this importance, but remember, profit is an accounting opinion and cash is a reality. So you have to track your cash. That's why I put turnover is a vanity, profit is a sanity, but cash flow is a reality. And if you understand the concept of cash, you understand everything in your business. I met some entrepreneurs that they don't have any clue of accounting, debit and credit, but they precisely understand that if there's cash in the bank, if they have the debts, they cannot put the cash into the pocket, they cannot do some investment. That's really a crucial concept, cash flow. That's why Fabien, when do the presentation, we are cash positive. We are not burning any cash because profit is fine. We are in profit since beginning of the year. But more important, with cash at bank, we increase our cash position about 300 or 400 key every month. This means that our business is not only profitable, but we manage the cycle between account payable and account receivable. So we optimize our working capital. And for the investors, for the employees, for the authorities, is the most important indicator, cash positive. Because you can be in profit, but burning cash, because your cycle is so long. Imagine a business that is selling invoices at, let's say, 1 year payment terms. I invoice 1 million, but we'll get this million in 1 year. Do you think that it will be profitable? Maybe, but you will need at least 600 or 700 of money to finance your business before you get the cash. Because you have to pay salary, you have to pay cost of goods, you have to pay general administrative expenses. That's why managing working capital is so important. When I arrived at Odoo, we had around 30, 35 days to get paid. Now we have a 21, because we are good at cash collection, because cash collection is really the priorities of the company, because I prefer the cash in my bank than the bank of my clients. So cash flow is the lifeblood on any company. It's the petrol in the car. You can have a Lamborghini, you can have a Ferrari, but you have no petrol, you cannot run. And many entrepreneurs, unfortunately, are struggling with this concept. They simply don't understand the concept of cash, the difference in profit and cash. So let's see into details. Cash flow. Cash flow is a cash inflow, cash paid minus cash received. This is simply this cash. It's really something like in your bathroom, the water in, the water out. The difference is cash positive. You cannot be in cash negative in this case, but you understand easily what is cash flow. Profit is income earned minus expenses incurred, but doesn't mean that the income is in your bank. It doesn't mean that the expense is already paid. You know, I take, for instance, a business like the supermarché, the Carrefour, this big company like, let's say, Amazon. Amazon make business simply playing with the suppliers. You receive cash on the spot because you pay cash. And I think you pay suppliers at 3 months, 4 months, 5 months. So it's not always take your cash, but take the supplier cash. This is a typical situation that is the dream of any financial guy. That's why Apple has something like 25 billion cash at the bank, because they manage the working capital cycle very well. That's why I just put a little slide to understand the selling to cash flow, the selling cycle, where we have the marketing that generating the leads. We have the same that takes those leads, try to turn into contract to exchange money for product or service. Then at the delivery, your client has to be delivered. And then you have the collection and the job, the dirty job sometimes. You go to the client and ask for money. We see some difference into detail about, again, cash flow and profit and loss account. I'm really cash flow oriented. I want to stress over and over cash, because if you run out of cash, you are really in trouble. That's why always when I talk to someone internally or externally of the company, by the way, in Odoo, everybody says that I completely focus on cash. Sometimes I'm a little bit too much focus on cash, but sales only when cash received. Profit and loss include all sales, everything. Number 7 in the B gap, in US gap, I don't remember. But it's just a credit in your P&L that you raise an invoice. That's it. Purchase of stock, only when paid for. But for profit and loss account, include all purchases associated with the year's sales. Then you have the opening closing stock. It's not included in the cash, but they're part of calculation on the gross profit. Then we have the expenses without any period of credit, very important, including the cash flow, including the profit and loss account. And finally, we have the depreciation. It's not included in the cash flow, but it's included in the profit and loss account. That's why we reported the EBITDA, because it's before depreciation. Before depreciation is just an accounting opinion, again. Depreciation in Belgium, in London, and San Francisco to Fabrice is not the same, because we have different rules of the game. The rules of the game are different, the gap are different. But it doesn't mean that my cash is different. My profit could be different. So connecting accounting with cash flow from our operation, so what the business is generating. We have 3 different cash flow, operation, financing, investing, but it's too complicated. Let's focus on cash flow from operation. It's simply income from operation plus non-cash expenses minus non-cash sales, the EBITDA, okay? Always thinking in terms of cash. Think of positive amount as cash received, as having a positive effect of cash, a source of cash. Every single decision I have to take on my daily job, I think, what is my cash impact, positive or negative? It doesn't mean that I don't take the decision if the impact is negative, but I know in my head that this is an impact, it's negative in my cash, that I have to take into account. But I'm not thinking in terms of P&L, always in terms of cash. Think of significant amount as cash paid out, having a negative effect of cash. A use of cash, not good for the cash balance, decreasing cash. It's always in this way. We finish with the principle of the retain, then we move to Odoo. As I explained to you, I will give you a snapshot how I use Odoo on a daily basis. With 2, 3, 4 different reports that I use, because at the end of the day, you don't have to use all the accounting system to have a visibility on your business. So just 3 or 4 things, and then I will show to you. But I will just finish with the principle, the must to know for me, for entrepreneurs to run this business. The double entry bookkeeping. Every transaction must be entered into accounts, and this must eventually balance. Debit equal credit. Why debit on the right, on the left, credit on the right? Because for an asset for me is a liability for someone also. Okay, quite simple. Asset and liabilities. What include? Asset is home, car, stock, account receivable, and the liabilities what you have to pay is the bank, is the salary, is the taxes, is the account payable. Equity, the difference between asset and the liabilities. Normally is your shareholders if you have a shareholder, so yourself, you put the money and you run a solo business. Okay? Credit versus debit is the yin and the yang of the accounting system. Credit is an entry to increase the liabilities, and debit is an entry to increase your asset. The ledger, we have different ledger. We have different ledger. Ledger is a principal book where you can enter the money transaction in a particular format. We have the sales ledger, we have a salary ledger, we have a miscellaneous ledger, but it's really technical for the accounting. You have to know that it exists, that's it. The balance sheet is a snapshot of a business at the moment of the day of the life of the company. Today, my balance sheet is not equal to tomorrow. The income statement, the records that income and expense in various categories. And finally, what I like is the cash flow statement. It records how a company got and spent this cash. So, I will show you how Odoo can help you in this daily work, I will give you some examples, some accounting. Right. Alors, at the end of the month, I just run 3 different reports. That's it, to know how Odoo is running or how the figures are going. First one. Wait, yeah. Why? Yes. Okay, finish the presentation. Can you help me? Because I have a double screen. I cannot see the. Je peux pas le montrer là. No, it's not this. No. Is this? Okay, I got it. Right. You see? Yes. Okay. So, at the end of the month, normally, I run 3 different reports. The first one. Oh, shit. Okay, sorry. I'm so sorry. Okay, the trial balance. Okay, okay. I know. Didn't change anything. Yes. Keep change. Okay. The trial balance. What I really need is just a trial balance. The rest of profit and loss statement, balance sheet is fine for the accounting, for the tax return, blah, blah, blah. For me, it's trial balance because it's a finance manager, okay? The trial balance give you all the account from 1 to 7 in Belgium, from 1 to 5 in US, I think, that have movement during the period. And if there is a movement, there is an impact. And I just see the impact. Odoo is a bit different because we have a revenue recognition policy. What we raise as invoice is not the same that we put as revenues because we have revenues in the future. So it's quite complete, it's accounting perspective. But for the rest, it's the same. The cost, the asset, the account receivable, account payable. So I run the trial balance. And I go into details with the general ledger to see what's happened. That's it. And I see the difference. And I just print this, the 3 or the 4 beginning of the month for the previous months. I export this into Excel, like this, and I'm working on it. And I've just trial balance on every single month since 2 years from now. This is the first report. Second report, most important, is this, the age receivable, how much money are not in my bank. And a simple ratio to use this, I divide this amount by the amount I generate in terms of revenues, billing for me. Because I know how many days are outside my company. I told you before, when I arrived, was around 30-35 days. 35 days of invoicing was not in the bank. Now we have within 2022. So this, for me, is a very important indicator to know what's happening in terms of cash. And the third report is the account payable. Because if I have the receivable and I have the payable, if the difference is positive, I'm happy. If the cifra is negative, I'm a little bit happy. So it means that I have to pay more than I have to receive, even if I have the money at the bank. And in this report, I analyze the number of days outstanding in my balance. And I can play with. Normally I don't play, but I could play. Saying I don't pay straight away, I will pay in 1 month, 2 months, 3 months. We are in the business that we pay cash, basically, maybe 10 days. Because 85% of our business is salary. So salary I have to pay every month. With just 3 reports, if you understand what is behind these reports, you can run your business. That's it. The rest you can do general ledger, balance sheet here, you can do whatever you want, but if you concentrate in the 3 reports, maybe a 4th report, a general ledger for some particular account, but it's just too complicated. Just these 3 reports into Excel can give you a really good snapshot about your company. And based on these reports, you can calculate a cash flow statement. I will not calculate cash flow statement with you today because it's really technical, but remember that with those reports, you can really have the feeling of your business. I think that I have just one more slide to show you, but I hope to be able to do this. Okay. Okay. So remember that every good business is a great accountant, absolutely. If you have a good accountant, you can succeed. You don't have to be an accountant yourself to run the business. You can get help from outside, but a good accountant is really mandatory for me in a business. And I think that that's all for my presentation. Or if you have some question, yeah. Before the question, tell me. Why you want to do? Why you want to run it? We do full different currency. Why? Okay, so you have to do a double accounting booking? No, for every single items. Just for the report. It's a bit complicated because you have, because normally you report to one currency, you cannot report in 2 currencies, so you cannot sort out a trial balance in 2 different currencies. Normally I report in euro, but I have expenses in dollars, but I convert dollars into euro with exchange rate, indeed. But I have not as any issue. There is maybe a workaround to do that, we can discuss later on if you want, but it's more technical, but we can do that. It's a little bit too technical, but you can do that if you need it. Any other question? Yes? Yes. Sorry.